Hey folks, how you doing? It's Mindset here and hope you guys are going well. I've been asked recently from a tweet that I put out there with regard to supply, demand and some price action concepts. And some people wanted it explained, so I figured it's probably a good spot or an opportunity to jump in and help you guys out. So we'll take a look at Bitcoin. But first of all, I'd just like to thank Delta Exchange for their ongoing support. It's a great exchange. If you haven't been there already, please go take a look. I've shared a video on how to trade on the exchange, and you can use ref links if you'd like, and there's some really good competitions at the moment. So thoroughly encourage you to go and have a look if that's your thing, and if it's not, that's absolutely fine. All right, so with the video, we want to take a look now at order blocks, because that's the premise of the supply and demand factor. And if we zoom in over to the previous all-time high area, you can see a bearish order block essentially is made up of a bullish candle from the bottom of the wick to the top that is present before price travels south. So you can see after we had the bullish candle in this area here, from the wick, top wick to bottom wick, then price heads south. So as we come back up to this area, this is and can be defined as a supply zone. So we want to jump in because we're looking at a micro time frame here onto the 5-minute chart. So we can well and truly see at the moment that we're playing within this supply area, and we can expect price to start to reject in here, as it has done. We've tested it once, we've come back up for some more. Bitcoin's a bit thirsty, and we can see where we're at. So let's hide this for now, and we'll take a look at our 5-minute zone, because this is what we primarily want to look at. And these concepts can be used from low time frame to high time frame. It's completely up to you to go and get yourself comfortable with them and make sure you're okay with trading in that respect. Remember, this is all a supply and demand video, so we can go and have a look at our bid retracement, our range that we've built. So prices come down. We've got some wicks in this area. We've traveled down and up. As we talk about supply, lots of stop losses would have been built into this area. We've come down, wicked through them. Price has gone up a little bit, come back through, and we've developed now a shorter term range. So we use a swing high down to the swing low of the area, which we expect there to be a deviation. So if we were to draw some demand in this zone here, which on a bullish order block is a bearish candle from top to bottom before a move upwards. So you can see we hit that block, we come back up, we tap it again, we draw into it, and you can see with the second draw that there is another bullish momentum that wants to continue on. So you can actually enter a trade in this area. So looking at this, if you were to enter this zone, if you were comfortable with chasing a range for a 3-tap, 1, 2, 3, and you were to put your stop loss beneath the recent swing low and aim for the top of the range, you can get a 3 return to risk reward ratio there. But the key thing we need to look at here is what lies above this area. And as I showed you before at the start of the video, we looked for the top to the bottom of a bullish candle. And there's a series here which we could look at before we head south. So this is how a bearish order block is characterized and defined as, is the white, or in this case white, green candle, bullish candle, from the bottom to the top of it before we have a rundown. That's an order block. So in this case, we can actually call this a supply zone. And you can see the price went up into it, wicked through it, took out some more stops up here from a buy side liquidity perspective for people who are shorting at this level. And then you can see that we've come down and we retest the top of the range. Then we've come down and then retested the bottom, because we're always looking for liquidity. So in this respect, after tapping this zone, we then come up for another tap of this area, because as we talked about before with our bearish order blocks, top of the white candle to the bottom of it, and then across. So you can well and truly see we come up and wick into it. If we were to pull out Fibonacci's as well, you can actually see that we also have some confluence here with the 618, that if you were to aim for the low of the range, then you are actually successful in this case. So if we just remove this one, and if you were to enter here, put your stop up the top above there, and then you actually did aim, you'd have quite a low risk, low return in fairness for this trade. It still goes to show that you can absolutely go for instances like this, because what lies beneath all this area here, as we wick down into this zone, a lot of people would have had their stops placed under here and here. So if you went typically and entered along here and people got greedy and take profits, then what happens is the price comes straight back down, wicks, and takes out all those stops that were set up in this location, comes back up, and what does price do again? Comes straight back down, and whoever set up along in this area gets smashed, and they are used as exit liquidity. So there you go, and that's pretty much how we can run through this range trading. Now you can talk about things like relative equal lows, as we do down here with price, and then you can also talk about lows being run. So as we come down from the range, tap this area, come back up, which would show you a good Fibonacci entrance for a low, for a short, beg your pardon. And then we actually hit and tap not only this order block that we showed you before, but also you run those lows where stop loss, buy side, sell side liquidity would have been for people who went long, didn't take profits, and are now getting their ass handed to them. So boom, tapped, liquidity, up she comes, relative equal lows, more liquidity in this area, and then price does rally up looking and searching for that liquidity above these old highs, which it well and truly gets in the form of buy side liquidity for people who shorted this area, and stop losses go there. So yeah, I hope you guys have found this video informative. I hope it helps you. And yeah, as you can see, price now starts to search for the next pocket of liquidity, wherever that may lie. So again, thanks very much, Delta. Thank you guys for watching. And I've just realized today as well that we are now at 500 subscribers on YouTube. So that's amazing. I just cannot believe it. I think I started my first video 3 weeks ago and we've got 500 subs. So out of this world, guys. Thank you so much. And yeah, as I sign off, you know the good old saying, say hi to your mum for me, look after your mates, and yeah, we will catch you next time, guys. So take care. Speak soon. Thanks very much.